Breaking news that just hit the markets this morning. Singapore's exports have crashed by 3.5% in May, completely shocking economists who expected growth of nearly 8%. This is a massive reversal from April's strong 12.4% jump, and it's sending ripples through our local economy right now. Let me break down the three key impacts you need to know. First, our non-oil domestic exports, which we call NODX, didn't just miss expectations. They reversed course entirely. Economists were betting on 7.8% growth, but instead, we got a 3.5% decline. On a monthly basis, exports contracted by 12%. This is like expecting your salary to increase, but finding out it actually dropped instead. Second, the electronics sector, which has been our bright spot, is losing steam fast. Electronics exports only grew 1.7% compared to April's massive 23.4% surge. Think of it like a car that was speeding up, but suddenly hit the brakes. Third, non-electronics took the biggest hit, falling 5.3%. Petrochemicals dropped 17.8%, non-monetary gold fell 25.9%, and specialized machinery declined 11.7%. Here's what this means for you as a Singaporean. If you work in manufacturing, logistics, or any export-related industry, your company might face headwinds in the coming months. For investors, this could signal trouble for Singapore-listed companies that depend on exports. Think about our major players, like Keppel Corporation or Sembcorp Industries. The data shows exports to our biggest markets are struggling. The US market dropped 20.6%, Thailand fell 17%, and even exports to Malaysia, China, and Japan declined. Only Hong Kong, South Korea, Indonesia, and Taiwan showed growth, but even that growth was much weaker than April. For your CPF and investment portfolios, this could mean more volatility ahead, especially if you're invested in STI ETFs or Singapore-focused funds. What should you watch for next? Economists are warning that the 90-day tariff truce with the US could create more problems when it expires. This export decline might be the canary in the coal mine for Singapore's economic outlook. Keep an eye on the next few months of trade data. If this trend continues, we might see the Monetary Authority of Singapore adjust their policies, which could affect everything from your home loan rates to the Singapore dollar's strength. The key question is whether this is just a temporary blip after April's surge or the start of a longer downturn. Stay tuned to the Investing Iguana for more updates as this story develops. And remember to review your investment strategy if you're heavily exposed to Singapore's export sector.